We are right in the middle of a wild earnings season, and honestly, the market is sending some seriously mixed signals. You've got some of the big names stumbling, but at the same time, a whole new group of leaders is starting to emerge. So, in this explainer, we're going to cut through all that noise and figure out who's really in the driver's seat right now.
Man, it's been a bumpy ride, right? One day it's trade war fears dragging everything down, and the next day you get these confusing earnings reports from giants like Netflix and Tesla, and it just adds to the uncertainty. So it really begs the big question we're tackling today. With all this chaos, where are we actually headed?
And this, right here, is the key challenge for everyone right now. You've got to separate the noise from the real signal. The headlines, that's the noise. You know, the daily chatter about trade fears, this company missing earnings, that one beating. But the signal, the thing that's actually driving the market's bigger trend, well, that's coming from something much more important. Softer inflation, a rally that's getting broader, and a major shift in who's leading the pack.
So what kicked this whole shift into gear? Well, it all started with one, and I mean one, incredibly important piece of economic data. Let's dive into the inflation report that completely changed the game last week. This right here was the catalyst. The Consumer Price Index for October, that's the main inflation number, it came in cooler than anyone was expecting. Now, why is that such a huge deal? Because it gives the Federal Reserve breathing room. It opens the door to maybe, just maybe, lowering interest rates down the line, which is absolute music to the market's ears. And the result? An immediate, powerful rally. And for all you chart watchers out there, this wave of optimism got a big thumbs up from a key technical signal. We saw what's called a bullish MACD crossover on the S&P 500. Now, if you're not familiar, don't worry. All you need to know is that when that faster black line crosses up and over the slower red line, it's often a pretty strong sign that a new, positive trend could be just getting started.
Okay, now we get to the real heart of the story. Because it's not just that the market is going up, it's how it's going up that's so important. What we're seeing is a fundamental shift in leadership, and that is a fantastic sign for the market's overall health.
I love this analogy because it perfectly sums up what we mean when we say the market is broadening out. For months, it felt like a handful of mega-cap tech stocks, the star quarterbacks, were doing all the work. But now, finally, other parts of the team, other sectors, are getting in the game and scoring points. That's a classic sign of a much healthier, more sustainable rally.
And this slide shows you that rotation in action. On the left, these are the new leaders stepping up to the plate. Healthcare, utilities, industrials, real estate, they're all showing some incredible new strength. And meanwhile, on the right, you've got the laggards, areas like basic materials and gold that are taking a bit of a breather. The key takeaway here is that you can see money is actively moving from one area to another. Now, you might be looking at this list and thinking, utilities? Seriously? Aren't those the most boring stocks on the planet? Well, not anymore. Their recent surge is tied directly to the AI revolution. I mean, think about it. All of those massive AI data centers need an incredible amount of electricity. And who provides that juice? The utility companies. It's a classic picks and shovels way to play the AI boom. Healthcare is another fantastic example of this new leadership, and it's being driven by a powerful one-two punch. First, you have a ton of medical device and biotech companies just crushing their earnings reports. And second, AI is completely supercharging the industry, speeding up research and development like never before. We're talking about new breakthroughs happening way faster than we ever thought possible. This brings up a really interesting idea you see all the time during earnings season, the sympathy play. Here's a perfect example. Comfort Systems, ticker FIX, they help build AI data centers. They reported absolutely blowout earnings, and the stock exploded 19% in one day. So what did investors do? They immediately started asking, okay, who else does this? And they piled into similar companies, like EMCOR, which then rallied in sympathy. It's like a ripple effect of success. So with all these new leaders stepping up, the big question becomes, can the old guard, can big tech keep pace? Well, this week is the moment of truth. Several of the tech giants are reporting their earnings, and it's going to be the next major test for this whole market rally.
All right, first up to the plate, Microsoft. For them, it is all about proving they can keep capitalizing on this AI wave.
Wall Street is going to be laser-focused on two things here. First, how is their Copilot AI product growing? And second, how is their Azure cloud business doing in this fierce competition? Those two numbers will likely decide which way the stock goes.
Next, we've got Meta. Now, these guys have spent billions and billions and billions on AI. So the question from investors is pretty simple.
Where's the payoff?
Yeah, for Meta, it really boils down to this. Is their main advertising business still growing? And maybe even more critically, can they show investors a clear plan for how all that AI spending is going to actually make them money? The market wants to see those investments turn into profits.
Then, of course, there's the behemoth, Amazon. With a company that's really like 3 giant businesses in one, you can bet investors will be picking apart every single detail.
So, the checklist for Amazon has 3 big items. 1. How's the AWS cloud business holding up against the competition? 2. Is their surprisingly huge advertising business still on a tear? And 3. What do the core retail sales look like? Any weakness in one of those 3 legs of the stool could cause problems.
And finally, we have Apple. As the biggest company in the world, their report can pretty much set the tone for the entire consumer tech space.
For Apple, it's all about 2 things. First, what's their AI story? They've been kind of quiet, and many think they're lagging, so any updates there will be huge. And second, the number that always matters, how many iPhones did they sell? That figure is still the engine that drives the whole company.
All right, let's wrap this all up. Here are your key takeaways. Number 1, the signal. That softer inflation report gave the market a major shot of optimism. Number 2, the shift. This rally is bigger than just big tech now. Number 3, the leaders. Keep an eye on healthcare, utilities, and industrials, which are showing real strength. And finally, the test. This week is all about big tech earnings.
And that leaves us with this final, crucial question. We're clearly seeing a changing of the guard, with new sectors taking the lead. So is this just a temporary shuffle, or are we watching the very beginning of a brand new chapter for the market? The numbers that come out this week are going to give us our first really big clue.